All right, hello and welcome, traders. It's Monday, October 14th, 2024. Great day in the market, great day in the accounts. Today, we're going to get to all of that. So I'm going to tell you what I'm trading. We'll go over the accounts briefly with you, tell you what we closed, what we're opening, some of the new trades. But before I get there, I really want to take a minute and talk about risk. Now, Tony Rehan and myself, you may know him as Tony from Mexico. We just did a podcast on risk a week or so ago. And we did talk, and I want to kind of carry that forward a bit with you. And I want to talk about risk. I'm going to keep it brief because we're going to get into some trades and some things with you. But I really want you to take this to heart and start to think about your mindset and understanding risk. And I think there's some common perceptions of risk. And a lot of people view risk through the lens of stability earlier in their careers and having that 9 to 5 steady paycheck. And how many people were told, hey, you need to have a 9 to 5 job, get that steady paycheck going, contribute to your 401k, be secure. Okay. Is that with or without risk? Well, I go back to the story of Jim Carrey, where he talked about his father could have been a great comedian, but he didn't believe it was really possible for him. And Jim Carrey's dad made the conservative choice. He got a safe job as an accountant when Jim was, I think, around 12 years old or so. But he was let go from that safe job. Okay? And Jim's family had to do whatever they needed to do to survive in there. And I believe they even lived in like a schoolhouse or something for a while, struggling to make ends meet. And the lesson from that, for at least for Jim Carrey, who became a famous comedian actor, was you can fail at what you don't want, so you might as well take a chance of doing what you love out there. So being the illusion of job security and having a secure job, it may feel safe, but no job is entirely secure. People lose their jobs all the time. Companies downsize, the economy can shift. Job roles can become obsolete. So the safety of a 9 to 5 is not always guaranteed to you. So I want you to think about that. And also, there's risks of being in the same routine day after day. Just because you want to stay in the same routine and steady paycheck, it might be riskier in the long run, especially because you're not developing new skills or preparing for changes in the world or the market itself. But I know that risk is relative, and it's not the same for everybody. So what may feel risky for me may not be the same for you. And often that's based upon your preparation and your experience. So for me, trading, I'm not putting my entire life savings into trading, but I'm putting a pretty good chunk of money. But I've been doing that for 35 to almost 40 years now. I don't feel a ton of risk trading in the market, but it's because I've built up a lot of knowledge, a lot of experience over the way. I've won big sums. I've lost big sums. I've made plenty of money over the years. I've given some of that back. But overall, I'm way, way, way farther ahead than most people would be. Why? Because I was willing to educate myself, grow my knowledge, take the risks of learning. Okay. And for some of you, that may be a difficult thing to do. I know it's, I don't want to lose a penny here, and I totally understand that. But for someone who has knowledge and experience, the risks aren't that big. Okay. For someone who has limited knowledge, the risks are far greater. I totally understand it. But the only way you're going to get anywhere out there is to take a level of risk. So what can we do, though, to mitigate those risks? Well, the easiest way to mitigate risks in trading, okay, is how you prepare for those trades. Okay? It's not less risky because I'm trading less risky assets. Tom's trading futures or he's trading options. Options are so risky. Options, to me, are not risky. To me, it's risky if you want to just plunk your money into a stock, okay, and then the stock goes down 30, 40, 50%. That, to me, is risky. Okay? Why? Because you don't have any control over what that company is doing. You don't have control over their earnings. You don't have control over their announcements, pre-announcements, guidance. You have no control over any of that stuff, okay? Which is one reason I don't love stocks, okay? I don't trade a lot of them, okay? Very minuscule amount. Why? Because to me, they make me concerned. Okay, I feel like there's more risk in those things than without it. So number one, preparation reduces risk. The better prepared you are, the more risk I think you can take, and the more you can diminish those risks. So again, without the knowledge of the markets or trading, certainly it's going to feel a lot more risky, and it is more risky for you. You don't have the knowledge to potentially overcome those issues that may come up. However, much of the fear that of risk that comes in is just a lack of understanding. And as you gain the knowledge, okay, you're going to shift from reacting to risk to actively managing risk. And how do we do that in trading? Well, for some trades, it's trading with certain size or having stop losses. For other trades, it might be also to be hedging certain trades. But you go into all trades, at least in my opinion, and we look at what can we lose first. What's the downside? I size all of my trades to an X amount of loss that is usually less than 2% of my account value. Now, can some sort of a black swan or crazy event exceed that? Certainly can. We've seen that happen. However, for the most part, for years and years and a decade or so, it's rare that those situations pop up. You just have to be prepared that if they do, okay, that we can handle them to the best of our ability, and then we'll learn and we'll go back at the markets again, which is what we continue to do. However, I want to make sure that I understand that in a normal market, up, downs, sideways, whatever the market may be doing, that I understand that if I lose a trade, it's only 2% of my account. I lose 2 trades, I've lost 4% of my account. Okay, but hopefully I'm making a decent percentage on a monthly basis, 2%, 3%, okay, on my total account overall after losses. So we're hoping to move through those. And stocks and options can seem risky, but again, you don't have potentially the education or the experience on how to deal with that. The best way to do that, learn, train yourself, but also take some risks. Okay? So a couple quick things for you here is risks are relative. Okay, what may be risky to you is maybe not risky to me, or maybe what's risky to me, okay, is not risky to you. Is jumping out of an airplane risky? Well, if you're trained and you've been doing it over and over, it's no more risky than playing around a golf. Okay. However, okay, playing around a golf could be risky. Okay. Swimming in a lake can be risky. Swimming in the ocean can be risky. Okay. Everything comes with, jumping into the boxing arena with Mike Tyson can be risky. Okay. Unless you're Buster Douglas. Okay. So if you have the experience and the training, okay, you really don't fear those things quite the same as other people may do it. Right? So it comes down to your preparation, because preparation reduces risk. How you prepare is up to you. You have to evaluate your level of risk, your risk tolerance, and the type of trades you're willing to take on, and decide how's the best way to mitigate that risk. How's the best way to reduce risk? Certainly, capital preservation is important, but when you're trading, you have to be able to take risks. Okay, you have to. Okay, otherwise, there's no purpose in trading. You might as well just invest, put it in a mutual fund. Okay, play it safe. Okay. However, is that mutual fund really safer? Have there ever been mutual funds that have gone down 20, 30%? Yeah. Are there mutual funds that underperformed the market average every year? Yeah. Okay. So your perception of risk may not be the same as mine. Okay? But what I want you to think about is knowledge is power, and if you invest in yourself and invest in your knowledge, you're going to make yourself much more valuable in the end than everybody else may be out there. And you're going to realize a lot more gains in what you do. And again, I've been talking about separating trading from investing, two big things. And then there's a third pillar, which is your retirement accounts, which might be your 401ks, your IRAs, and things like that. What level of risk are you willing to take with each of those assets? Okay. Leaving your money in a bank, maybe you feel that's not risky at all. But to me, there's also opportunity risk. What could you have done? Okay, where could you be now had you taken at least a little bit of a risk, and instead of just putting all that money into treasuries and money market accounts and CDs, okay, where could you be had you put that to work, at least in the stock market, where you have an average return of 10% or something like that? You've really got to take a look at that. Anyway, that's enough on risk from me. Okay, make sure you get a handle on your level of risk. And as my friend Tony says, you got to risk it to get the biscuit, baby. And if you don't take that risk, you're never going to be able to realize what could have been. Okay? But start small. Start with your trading account. You can keep your investing account into safer assets that you may feel you want to do. Okay, but start with that trading account and learn how to trade, learn how to invest. It is a skill that will last you a lifetime. All right, so let's take a look at the markets today. Briefly, we had a really nice up day. I will share briefly the charts. We're going to keep it quick for you. On the S&Ps, yes, we hit another new all-time high, breaking out even further here, up to 59.18. 6,000 is in sight. Here we are within 100 points of the 6,000 mark. So new all-time highs again, breaking out to the upside. If we're looking at the weekly chart, okay, squeeze has fired to the upside. You've got stochastic momentum, RSI, MACD, all rising to the upside as this thing just continues to take off. Okay, you're knocking at the Bollinger Band, but you're really not breaking it, moving to the upside. And your 3 ATR band, we're not there yet. Okay, so could be potentially a little bit more upside to go. RSI has not hit that overbought level yet. If we look at the daily charts, everything here seems still pretty positive overall. Okay. We were in a squeeze, maybe breaking out as of today. Now, we did break the Bollinger Band today, and we did see RSI get into the overbought region. So we're a tad overbought. I will reiterate it. I've been saying this for weeks. I am bullish, but cautious. Okay. I am not changing my investment strategies. However, I'm just being a little bit more cautious. I did close a trade today, not because of any reason, except I wanted to remove some risk, and it was at a 90% winner, so it was great to take that off. Reduces my level of risk. I've also tweaked a few of my 112 trades. I've got a couple that are calendarized, which means those naked puts are going to come off soon. I'm going to still have a bunch of put debit spreads on. Okay, so not only did I close naked puts today in my account, but I've also got some of the newer 112s with some calendarized naked puts, which are going to come off a little sooner. Yes, there's a little more risk in those because the shorter DTE, it's a little higher delta. We're sitting at nearly an overbought, but we're not there yet. So the market's bullish, but I'm being cautious. I am simply just letting risk run itself off of the table, and I'm not adding a ton of longer term risk and stacking naked puts out there. So that's one way I'm dealing with risk to an extent. And of course, I do have hedges on. We've got our always on delta hedge. We've got volatility hedges underway. So I'd like where we are, reducing some of the size. Okay, we went to a 111 for a while. We're back to the 112s. We're going to have less naked puts. We're going to have some pretty good hedges on. We're going to have a lot of put debit spreads on, and we're spreading the accounts around a bit more. So there's ES. If we take a look at oil today, oil, pretty solid down day, a big drop in oil today. So we looked like we topped out maybe around this 77. We're all the way down back to about 71 on oil. You can see that we are overbought and tipping over on the stochastic momentum. The daily chart, all the way back down to what I feel is a previous support level. Okay, it's been resistance, it's been support, it's been support recently. Will it be support again? I don't know. Pretty good momentum to the downside. If you look at the weekly chart, though, really the momentum is to the upside. Stochastic momentum is rising. MACD's been curling up. Squeeze has been moving up. You're in a bullish PSAR. So a little bit of a yin and yang going on oil, which I think makes Strangles a really good opportunity. IV this morning topped, I think, 105 IVR on oil. Perfect time to get in on some Strangles. We do have a strangle working right now. It's down a tad right now. We've also got 112 trades on, which are doing fine. We've also got a put credit spread that's on, a 112 on, and then we've got a naked put that's doing just fine on oil right here. So oil, I think, is just in that good range up and down. Let's take a look at the 30-year bond. Okay. Now, the bond market was closed on the cash side, but the futures were open. So if we're taking a look at bonds, we can see here, let's see if we can spread this out a bit more, give you a better sense. You can see that we're almost back to this support level here. You can see it fairly clearly on the daily chart as well. We are sitting here. We dropped lower. We hit the bottom of the Bollinger Band. We did bounce off of that. So we keep getting these selling off the lows, but we're just not getting the follow through to the upside. We're going to see if that continues to hold. Okay. If you're looking at the stochastic momentum, this thing is very oversold. If you're looking at RSI, very oversold. The weekly, not quite there yet. So there could be some more downside, to go overall. But, we're past the 3 ATR band. We're right at the Bollinger Bands here. There's support areas right in where we are here. We're kind of failing at them, but not massively. And we're really approaching this trend line and the 618 fib. So I do like where we are on it overall. I am not adding more long bonds, but I am hanging into my losing bond positions here. We'll hang in for a bit more. If we have to, we'll roll out into the future. Rolling out, not my favorite strategy, but if we have to do it, we'll do it. Gold, just kind of up, down, not doing a whole lot of anything. The weekly chart looks a bit toppy, in my opinion, overbought on both the RSI and the stochastic momentum, but the daily chart looks like a little bit of a momentum moving to the upside here. So yin and yang, I think, we just sit and watch what bonds are doing. I think if you want to put on some type of a 111, 112 trade, maybe even a put credit spread, but I'd be very, which is defining my risk, I'd be a little bit cautious on that. And then we looked at silver today. I'd really like to get a trade on silver. If we're looking at the daily chart, I think we're close to an overbought level on the stochastic momentum and waiting to see if this thing starts to bounce higher. Did not happen today. It started to look like it was happening. So we'll give it another day. I mean, I'm in no hurry. We are at this essentially double top to triple top almost in here. So will we pull back a little bit more? We'll see. I'm not in a hurry, but I am watching silver. I think that's certainly interesting. The Aussie dollar, I really like it here. We're sitting at right at the 21 EMA on the weekly. We're right below the 21 EMA on the daily, which is the weekly is overbought and dropping. The daily oversold and rising. Perfect scenario, in my opinion, for a strangle. I did try to get one on today. Did not fill. Didn't chase it. We'll try again tomorrow. And then lastly, I want to touch base on RTY because this is where I did put a new trade on today. So I wanted to get long on this. Now, the weekly has this resistance level that we just have not been able to break through. I feel like with the daily momentum, as things are picking up, we're in a squeeze, potentially to the upside. MACD's reversing, moving higher. Stochastic momentum's moving higher. RSI's moving higher. I think the time has come for the small caps to break out to the upside. I think we could see this Bollinger Band start to open up. We are in a squeeze. Look how tight this Bollinger Band is here on the daily. Triggered a bullish PSAR today, first time in a couple weeks. We're already bullish on the weekly. I like where we are, so I wanted to get long, and we jumped in with a credit spread today on that. All right, let's take a quick look. What did we do in the accounts today. I'll share that with you. All right. So we did close out $2,700 today in a naked put. It took 61 days, not too bad. We captured 90% almost on that trade in 61 days, took it off. So that's the only trade in that account. The Lazy Trader account, which is our investing account, a little bit different, works a little bit differently. We hit new all-time highs in this account today, 312. So I had a nice $4,000 net lick gain today, but we also had an $1,800 realized gain today in this particular account. So this account is continuing to just move its way higher. Again, this is our investing account. We expect that it'll do 2%, 1.5%, 2% a month. It should not keep pace with our trading account, but the trading accounts, I think we've put in over almost $7,000 this month is the gain. This thing's up about 3,200. I have other investing accounts, but this is the one I've been sharing with everybody, taking a look. We closed 2 of the SPY leap puts today. So those are that's fantastic. We added some more, but we got into 2 new. We closed 2 of the SPY leap naked puts, freeing up some buying power. Added some more, freeing up 2 more tranches of it. So we keep adding to that. We also, in that Lazy Trader account today, I mean, we had almost a $5,000 up day today in that account overall after the market closed, and we're up again about $3,200 just this month alone. We're up $10,000 since we started here right around the last day of July. So we've been at this for 2.5 months. We're up 10 grand, which is not too shabby. So if you can make 10 grand or 5 grand a month on a $250,000 account, what's up to 312 now, we have added some money to it. Okay, I'm pretty happy with that. Okay. Just keep adding, just keep swimming with this particular account. But we have had an outstanding month, booking some profits as we go, but watching what's going on. And we did add new trades today. So we did add our 1DTEs at the end. We got into Adobe today, and we got into TNA as a trade. We used a leap on TNA today to get long. All right, so there you have it. There's what we're doing. And again, I wanted to just point out to you, understand your risk level. Trading accounts are different. Trading account, investing account. Trading account, be willing to take some more risk, size appropriately. Investing account, be willing to take lower risk. Okay. Look at the different assets and the type of trades that you're doing. I call it the Lazy Trader account because I want the mindset that I should not be active trading in that account. I shouldn't be on all 24/7. It doesn't mean I should ignore the account and I'm lazy about what I do. It's that I want to be lazy in monitoring, and I don't want to overact in that account. I just want to let it work. So we're going to let that account continue to work. And if we see bonds start to reverse here, both accounts are going to see gigantic improvements in net lick, which is all good. That's where we are. All right. So mind your risk. Okay. Understand what you're trading there. I hope you got some value out of this. Give me a thumbs up down below if you like this. If you're not a subscriber, jump in and subscribe to the YouTube channel. And we'll see you guys later. Stay safe out there. Bye-bye.